Hi, my name is Enrique Gomez. I'm with Commercial Mortgage Depot. Commercial Mortgage Depot been established since 2008. I have been in the commercial business for over 30 years. Today, we're going to have a conversation with Ski Swakowski. We're talking about commercial mortgages. Ski is the owner of Radical Performance Business Solutions, a consulting and coaching company focused on primarily the mortgage and real estate business. I've known Ski for over 20 years. Back in the days, we used to go to a lot of motivational speakers. Nobody motivated me more than Ski. Ski was great at motivation. He's great at getting the people going. I learned a lot, and I'm still talking to him 20 years later. So that says a lot. Ski, tell us a little bit more about your company.
Enrique, great to be with you today. 30 years, you've been in the business. We've known each other about 20 and had some great times through the heyday for sure, right? And, I've gone from being in the residential part of the business in my first part of my career, and then into the commercial side of the business. You knew me when I was at Interbay Funding, and we certainly saw a lot of business back in those days. But it's given me a really good balance to understand both the residential originators and the commercial originators. I've seen both the residential markets and the commercial markets. So it's enabled me to get a pretty well-rounded view of exactly what goes on, the dynamics between those two. And I think that's kind of where you are in a way. You do a lot of business with residential brokers and loan officers, right?
Yes. Yeah, we work with a lot of residential mortgage brokers and loan officers on their commercial loans. A lot of them don't want to get involved with commercial loans, or they're learning, they want to learn. I'm kind of, you can say, like a master broker. I know so many people and so many lenders. I do a lot of underwriting. I review a lot of these deals. I love commercial. I don't know anything about residential. Talk to me about residential loans, I'm lost.
Enrique, as we have gone through over the years, and I've watched you grow your business, and I've watched how you've done the business. I've seen you at a lot of the trade shows, networking with the residential brokers and the residential loan officers. And from my experience at Interbay and dealing with them firsthand, we know that there's a trepidation, I guess, on the part of the residential originators to get involved in commercial, because I do know both sides, and I can see the differences. I know the differences between residential and how they're looked at, and I know what is expected on a commercial loan, and that intimidates the residential people a lot. What would you say to maybe allay some of the fears that some of these residential people have?
The commercial stuff, basically, it's just asking questions, wanting to know why people want to buy the buildings. I train a lot of people on how to get the loans. I train people what to look for, what they want to know about the borrower. A lot of times you need to know the borrower. You need to know more about them, their business, compared to just picking up their tax returns and filling out the application. We want to know more about the people and why they're buying the apartment building, the retail building, the building for their business. And then from there, we could take it and see what we're going to do with it. A lot of the residential brokers, they don't know what to do with it. They don't know. They only have maybe one friend of theirs that works for one bank, and that's it. They're stuck with that, where the loan has to go somewhere else. With me, I know what box is going to go, whether it's going to be a stated, hard money, SBA, or conventional commercial mortgage. I'll know once I look at the tax returns, once I speak to the people for about 10, 15 minutes, I know where that loan's going to go. If it could go anywhere. If it can't go nowhere, then we'll kill the deal real quick.
You mentioned that you've done a lot of loans over the years, so you kind of know what works and what doesn't work. And a lot of these residential people don't. They don't know that, well, yes, I need to get all this information on the borrower, which is what they're used to in a residential loan. But what they don't get is that probably the most important thing on any commercial loan is the property for almost any lender, because as you could probably explain to us, that property in many cases allows you, and the equity in the property will allow you to get a deal completed when you couldn't have gotten it done based on just the people's information. So can you maybe give a little insight into how some of these deals work based on the property value and property?
Well, even now I'm working on a deal with a real estate broker for 3 days. I'm still waiting for the income and expense on the property. They don't understand that the income and expense on a property dictates what loan amount you get. The borrower can make $1 million a year. If the property does not debt cover the loan, they're not getting anything. So we have to get every single property. We have to look at the numbers, the income and expenses, all the utility costs, the taxes, insurance, to see what kind of a loan is going to support. Especially now in this market with apartments, everybody wants to make sure that they're paying rent because of the coronavirus. A lot of people started paying rent, so it's very detailed about the property. And what happens, a lot of people get intimidated. A lot of people call, instead of talking about the property, they want to talk about the rate. Right now, the rate doesn't matter. Look at the file. Let's see if we could do it before we shop for rates, you know. And I think that's the most important thing that everybody has to learn. And a lot of people are intimidated by asking the real estate agent. The real estate agent just wants to close the loan. They don't want to give you any information. You have to go keep pushing them to give you the income expense on the property, see if it supports the loan. The same with the mortgage guy. He has to keep going, looking to get the information on the property, see if it supports the loan.
Enrique, can you talk a little bit about the problems, the challenges that you bump into when you're dealing with the residential loan officers and brokers and, you know, in getting a transaction done? What are some of the things that you would like to train them? And I think you actually do that, by the way. You have both the ability for them to just do a handoff to you, or you can help them and lead them through the process. But what do you see when you're working with them, when we're trying to teach them the process? Where do you see the biggest problems come in?
I guess it's the intimidation of commercial loans. They hear commercial, they freak out, they think it's something out of this world. We look at numbers. We're not emotional at all. We want to look at the numbers. We want to make sure the income expenses works. When I work with a lot of different brokers, I'll tell them, I'll walk them through. We have two different options. You want to give me the deal, give me the deal, give me the borrower's information, get out my way. We'll close it and we'll work with you. No problem. If you want to learn, we'll take you step by step. We'll do conference calls with you and your borrower. So that way you get to learn. So you know more about the commercial loans. And when you're talking to real estate brokers or you're talking to more clients, you'll know what to look for, what to get. A lot of guys, friends or family are looking to buy commercial properties. And instead of them taking a deal, they'll tell their friends to go to the banks. Banks right now are very hard to do mortgages with. A lot of banks are still involved with the PPP. They're so behind, it's not funny. We work with a lot of different banks. We also do our own stated loans. With our stated loans, our rates are a little higher, but we're closing them pretty fast. With the banks, it's taking anywhere from 3 to 6 months on some of these loans because a lot of times they're still involved with the PPP. They're worried about what's going to happen with the market. They're making sure that everybody's paying rent. They're looking at bank statements to make sure that the rents are being collected. With our stated loans, we're not looking at any of that stuff. We're just looking at the income and expense on the property. It supports the loan. We're fine. We're not looking at people's tax returns, see what they're claiming. We're not looking at the bank statements, see how long the money was seasoned for. We just want to make sure you have the money before we close. We verify the funds are in the bank. We verify the appraisal of the income and expense on the property are good, and we're ready to go. With the banks, they're looking at everything. They're also verifying everything through deposits. They want to make sure the loan is seasoned. And for loans, and there's a lot of borrowers like that, and we do work with them, and we go through conventional financing. We just did a loan not too long ago. We did an 80% loan to value, and the rate was like 3 3/8. So we do work with a lot of banks on competitive. We try to get very competitive on loans that warrant, and they have to close. You know, they don't have a time frame to close. That one that was for like 3 3/8, it took us almost 5 months to close. From start to finish. You know, the realtor was pulling his hair. The borrower just wanted the rate. He wanted the deal. He says, just get me the deal. The realtor was freaking out, but eventually we closed the loan, you know. And then we have other deals with the stated. The rates are going to be somewhere in the 5s. It'll take us 30 to 45 days to close those loans. And, you know, everybody's just rate conscious this nowadays.
Enrique, you mentioned SBA earlier. I understand that you are, in fact, SBA certified, right?
Yes.
So talk to us a little bit about the SBA loans and where they fit into this scheme of the different types of loans available. You talked about the stated or the no doc type loans and the full. Tell us about the SBA loans.
The SBA, they're full doc loans. There's a 7A, there's a 504 SBA loan. So a lot of owner-occupied buildings, you come in with 10% down. Right now, we're in the process of closing next week a window manufacturer. The employee was working there. He's been working there for years. The guy wanted to retire. He sold the building and the business to the guy. The guy's buying everything for $700,000, the building and business. We're giving him 90% financing. He's coming up with $80,000 down. From the $80,000 that he's coming down with, we're giving him $45,000 for working capital. We're giving him $18,000 for closing costs. And we're giving him a couple $1,000s for something else I forgot. But he's putting $80,000 down. He's getting back at the closing about $70,000 after he puts his $80,000 down. That's the great thing about the SBA. The SBA is a project. To buy the property, the business, working capital, they want to make sure you succeed, so that they're giving you all the money to make sure everything flies. This was an existing business. The guy is just taking over an existing business that he's been running for years. We've also done restaurants. We're doing trucking companies, supermarkets. These are all businesses where the guys want to buy a building where they're at, or they're looking to expand and buy another building so they can move their company instead of paying rent. And they're all 10% down. Right now, during the PPP, with the stimulus package, the SBA guarantee fee is waived. They're also waiving 3 months worth of interest up until September of 2021. If you close loans before then, they're going to give you 3 months worth of mortgage payments waived, and they're going to waive the guarantee fee on all SBA loans.
You know, Enrique, you mentioned a gas station, a restaurant. I think there's some properties that are pretty difficult to get done, or they have, I won't say difficult in the sense that they can't be done, but that there's a lot more work to them and there's certain considerations. So talk a little bit about the tougher properties, because I think, maybe people don't know this, but the multifamily are the ones that you mostly see in the marketplace, more than 5-unit rental properties, and then mixed use, and the office buildings that we all think of as commercial. But these other more special properties tend to bring with them certain other problems. What are some of the things that come up with those types of transactions?
I mean, with a gas station, you have to order phase one. Sometimes there's a problem with the environmental. SBA loans would take anywhere from 3 to 6 months. And it could be a problem with the environmental. It could be, right now we're working on a place where the phase one requested we do a phase two to pull a tank out. So we wound up pulling an oil tank out, which the owner did. They're working on the septic tank. They're working on a septic tank that they have to pull out. So this is all in the process of the loan. We're going to hold money in escrow for the septic tank so we could close it. We're going to wind up closing the loan. He's going to move his trucking company there. But it took a little longer because there was a problem with the environmental. Some of these loans, it could take 3 to 6 months. Some could take 9 months. Okay. The trick is to get enough loans in the pipeline so that you keep working on a loan as everybody's doing their environmental, the appraisal, and cleaning up whatever messes they're working on. We're working on other things. But we also have a bridge loan program. We do a lot of bridge loans, hard money, where a lot of these SBA loans couldn't qualify through the SBA because the guy's tax returns weren't that great, or the accountant wasn't that great doing their tax returns, or they had to close within 30 or 40 days. They had to close faster. Some people had to close within a couple of weeks. So what we wind up doing is we'll do a bridge loan. We'll do a hard money loan. They buy the property, and then later on, once they get everything cleared up, they could refinance out through the SBA, or they could go through the conventional banking route if they qualify that way. We're working on one now where there was an underground tank, and they still have another 2 years worth of remediation. So we wound up doing a hard money loan because there was a plan. There's a plan intact to clear up the property. And we're fine with it. The investor's fine with it. The attorneys were okay with it. So we still closed it. We're just going to hold money in escrow as the work gets cleaned up.
Enrique, let's pretend I'm a loan officer, a residential loan officer, and I'm ready to try to maybe find some commercial properties that are out there. Where should I be looking? Where can I find some of these leads? I know sometimes they just show up and people ask you, but if I want to be a little bit more aggressive, where can I go to find some of these commercial leads?
I mean, you could talk to the real estate agents you're currently working with now. I get real estate agents call me all the time. I never heard about you. I've always been looking for a commercial person. I didn't know any commercial people out there. And a lot of real estate agents are looking for commercial people. If you don't tell them, they don't know. All you got to do is talk to the same sources you're dealing with now. Says, look, we're doing commercial loans, and I'll walk you through on every deal. You could call me in give me the scenario. I'll talk to the borrower. I'll talk to the broker. We'll do a conference call, and we'll brainstorm and see what we could do with the loan. If we could do it or we can't do it. We could do it. Here's what we need. We can't do it. Here's why we can't do it. On to the next. Just keep talking to the real estate brokers and tell them now we could do commercial loans. I have a lot of residential reps I work with. They work with a lot of different residential companies, and they're giving me a lot of commercial loans. And it's just basically the same realtors they're working with. They don't know where to go. A lot of real estate agents have no idea where to go.
I think there's also opportunity for those loan officers to look at the information they're getting in the application, because they may see somebody who has investment properties. Well, guess what? Find out if they have investment properties and get the information on those investment properties. They may be able to refinance some. They may be looking where they may be selling some, in which case they can take that to a realtor. There's opportunities for also, if it's a self-employed person, if it's a professional, maybe they'd like to own their own office for their practice, a doctor, dentist, lawyer, whatever. So there's a lot of opportunities right within their residential business, right?
Yeah, while you're taking the 1003, talk to them. Look at the schedule of real estate. When you're looking at the schedule of real estate, you see the guy has 10 properties, no mortgages. A lot of guys have a lot of houses, 1 to 4 family houses with no mortgages. They don't know how to take the mortgage out. We do a lot of cash out refis on 1 to 4 investor properties. We lend to corporations, and we'll go up to 75% all cash out. We have one borrower, we must have done 10 properties in the last 12 months. All cash out, 75% loan to value. A lot of times, when you look at the schedule of real estate, you could ask them about the interest rates on the other properties that they have. I'm working on clients now that I didn't realize they have 7-8% interest rates, where we could get it down to like 4%. And it just right now we're just talking, and everything just started popping up. And these are my clients I've had for years. But you forget until you start talking to them again about something else. The good thing about commercial is you have a lot of repeat clients. I've had the same clients for over 20 years. People when I first started my first company, they still come back to me. And all they do is commercial loans. Once they have a good relationship with you, they don't want to go anywhere else, because I have everybody's tax returns. I have all the corporate docs, all the LLC docs. So for them, it's just to make, they make a phone call, Enrique, I'm buying another property. I just have to update their file. I got guys' tax returns from 1998. I still have their tax returns in my computer, which is wild. I just go through stuff when I'm talking to them, and I keep finding all these old stuff they have, all the different entities that they have. A lot of commercial guys are constantly buying properties, whether they're buying apartment buildings, stores, or 1 to 4 family houses. They're constantly buying properties. They're a great source of revenue, like an insurance company, where you have these clients for years. I have the same thing with a lot of my commercial people.
Well, let me get this straight now. If I'm that loan officer, I'm ready to go. I have some ideas on where I can get this. You said this earlier, but I have a choice. I could either say, hey, look, I'm really busy. I focus on residential. I don't want to get bothered with it, but I wouldn't mind making a few extra bucks on a commercial deal. So I can hand that off to you, right? Or I could say, hey, Enrique, I got this guy. I want to be the communicator on information. I want to learn what's going on about this process. So that's the other option, is you would kind of hold their hand through the process and help them learn a little bit more about commercial, so that they can maybe be a little bit more effective and start to get more of that commercial business and become more, let's call more of a professional, mortgage professional, well-rounded mortgage professional.
I love teaching people. The more you learn, the easier it is for me on future deals. And hopefully we have a relationship. I've had people I've been dealing for years. Every time a residential guy goes from one company to another company to another company, they give up the residential company, but they still have me. I keep working on all the commercial deals.
Let's talk a little bit about something different. Investors. The investors you also do business with directly. So while that may be a source, by the way, for the loan officers and brokers, some of the investors are going to come directly to you. So what is it that you want to tell the real estate investors that they need to know that you could help them with right now, where they may have a problem or a challenge?
We work with a lot of different types of loans, from stated to full doc to hard money. So I know what box to put the loan. I've had clients of mine that we had to do hard money loans when they first started. Then from there, we went stated to get better rates. And then now we're doing full doc loans where the guy might have came to my office in the beginning and he got a 12% interest rate. That's what he was at that time. He had no experience. He didn't know anything about the business. No banks would touch him. Now they're getting loans at 3.5%, 4%, because now they have the experience, and it's been years. I have guys who have properties that are paid in full, and every now and then we'll tap into those properties and go buy more. And they start investing in properties, whether it's going to be a bridge loan so they can flip it, become a hard money loan, they buy a property, fix it, flip it. So I have the knowledge to know what box it's going to go to. I'll look at your loan, analyze it, and say, here's what we're going to do. If you want to do something real fast, if you're not in a hurry, here's what we'll do, and we'll get you a better deal. So every deal is different. Every box is different. So I want to make sure that I'm going to make you happy. You're going to come back to me.
As you said, everything is different. And that's where it actually makes it kind of fun in the commercial side of the business. Not that residential can't be fun, but let's face it, it's pretty homogenous. You know what to expect, whereas it can be really diverse and different from loan to loan and scenario to scenario. So putting the pieces together, it's kind of like solving a problem, a puzzle. And
yeah, never a dull moment. Yeah.
Yeah. And you can't let that discourage you, because you have, as a residential person, you have somebody like yourself, Commercial Mortgage Depot, that's there to essentially say, all right, we can do this deal. Here, I'll take it off your hands and handle it, or here's what we're going to do, and I'll show you what to do. But that's kind of really a great way to get involved if you're not experienced in the commercial side. I think it's an awesome way.
You get paid. Yeah, and you get paid extra income.
That's even better.
Wow.
So, Enrique, you mentioned bridge loans. So there might be some people that are unfamiliar with what a bridge loan is and how it fits into the financing process. Why don't you give us a little bit of an understanding of that product?
Okay. A bridge loan is also known as a hard money loan. People get these loans because it's fast. We could close loans in as little as 2 weeks. I've closed loans in 10 days with no problem, as long as the title and everything is done. Sometimes we do appraisal, sometimes we don't. I have a few loans that we just closed. We had one where a guy bought a blanket of properties. One of the properties was worth a lot of money. So what we did was we took one property as collateral. We let him keep the other ones. He paid $400,000 for 3 properties. The one property we kept was worth $700,000. So we said, fine, we'll put a first mortgage on this one. He put 50% down, and we let the other properties loose. I have another deal where the guy wanted to buy an auto repair shop. The problem is he had to close within 30 days. We couldn't do an SBA loan, so we wound up giving him a hard money loan. He put $200,000 down on a $600,000 purchase. We're closing the loan. Later on, he's going to refinance out with the SBA and get a conventional financing. A lot of our clients don't have, their tax returns are very small. They don't show a lot of income, and they don't show a lot of assets, okay? But they want to buy a property, or they got a great deal and they want to flip the property. So they come and they say, look, I want to buy this property so I could flip it. We don't show much, but we know how to read between the lines. I mean, they make $20,000 a year, but they have a car that's making, their car payments are $1,000 a month. Okay, so in the credit score is 750, 800 credit score. So we know that they're fine. They don't claim enough money to show what they're making. A lot of times they don't have the money seasoned. So we're not looking for seasoned funds. Okay, make sure the money's in the bank when we're ready to close, and we'll close the loan. Hard money is really fast money. It's not dumb money. It's just something that makes sense. You have to close fast. And there's got to be a lot of equity in the property because it is expensive. It could be anywhere from 10 to 12% interest rate, and you could wind up paying anywhere from 2 to 4 points on a loan. So it isn't cheap, but if you're getting a great deal, or you want a property and you can't show what you're making, it's cheaper. I tell people a lot of times, it's cheaper to pay me than it is to pay Uncle Sam.
Are you also doing the 1 to 4 investor programs?
Yeah, we're doing a lot of 1 to 4 investors stated, no tax returns. We're looking at the income of the property to support the loan, similar to a commercial loan. As long as the income of the property supports it, the credit score is fine. We're doing anywhere from 70, 75% loan to value. And those loans we're closing in 30 days, 40 days. I think the slowest thing that we're having now is the appraisals because of the virus trying to get into the properties. but we're closing them pretty fast. And again, we're not seasoning funds. We just want to make sure the money's there, and we're not looking at your tax returns.
You know what, Enrique, it sounds like you really have a fantastic menu of products for a lot of situations. And that's probably where you are so much better a option for somebody looking for financing in the commercial world than if they're going to a bank, especially with what you said. They're so busy with the PPP loans, who knows when. And yeah, they also tend to be a lot fussier. And it's smaller loan amounts. I know from my past experience, they just do not like small loan amounts. And so maybe you want to talk a little bit about that, because I know there's probably people that are watching this, they're saying, hey, I got a loan and that's $100,000 and I can't seem to get a home for it.
Well, what's funny is right now we're working on a loan for $250. And I spoke to 4 different banks, none of them want it. The guy's credit is great, the income is great. They don't want to touch them. It's hard for a banker to work on a $250 loan amount, $350 loan amount, because at the end of the year, they have to meet their quota. So every loan officer at a bank has to meet their quota of whatever, 10 million, $100 million. And they're not going to get to it working on small loans. So what they're doing is they're picking and choosing. They work for a bank. So everybody's jumping in at them to do their loan. So all these small loans get disregarded. So we specialize in those small loans. I mean, you're not going to get bank rates. Your rates are going to probably be somewhere in the high 5, 6, but we're going to get them done. Right now, I'm doing a loan for $150,000. I've done loans for $75,000. You know, we're not looking to kill people on every loan. So I'm not making as much money on a $75,000 loan as I'm going to make on a $1 million loan, but it's going to pay my phone bill. So I don't care. You know, every penny counts. So I'm not looking to discourage anybody. A lot of my clients started with a $75,000 loan. Now I'm doing a $2 million loan for them. Mm-hmm. You know, so I don't turn anything away. If it makes sense and we could do it, we'll close it. You know, it's just going to be in a stated box. It's not going to go. You're not going to get 4% interest rate at 3.5. Your rates are going to be a little higher, but you're going to close the loan.
Enrique, this was really enlightening for a lot of the residential people. As I said, I know both sides. I know what confounds the residential people, and they're very, very apprehensive. Boy, I'll tell you, you gave a lot of information that I would hope that people listen to and realize that you offer a great opportunity for them to put their toe in the water, so to speak, in the commercial world and increase their income on these deals that in many cases they are seeing. And if they put a little bit of work into it, they can make even more money by putting their antennas up and finding some more of those deals. And great information today, Enrique. Thanks a lot. Really appreciate it.
Thank you very much. And yeah, if you want to check out our website, commercialmortgagedepot.com, there's a bunch of different types of properties that we've closed already. You can see what we're doing and the different programs that we have. It's been a pleasure. Thank you very much.